Good morning, everyone. My name is Chuma Okadike, and I welcome you all to the Vetiva breakfast meeting. This meeting is being hosted by Vetiva Capital Management in partnership with Frontier Africa Reports. On the agenda for today, we'll be hearing from Ibukun Omoyeni, who is the junior economist at Vetiva, and he'll be speaking on the latest unemployment results released by the NBS. After that, we'll be getting the equity and fixed income analysis from Emmanuel Adeoye and Omorege Ogogo. After that, we'll be hearing from our media partners at Frontier Africa Reports on other Pan-African updates. Before we get to that, we'd like everyone to note that this meeting is being broadcast live on Facebook and it's being recorded, and the recording may be shared with third-party listeners. Also, if you're joining us on Facebook, this is regarding Q&A, you can send your questions in using the comment section, or if you're joining us on Zoom, you can either raise a hand or choose to type your questions in any of the boxes, that's the Q&A chat box or the chat box itself. To start, we'll be starting with Ibukun Omoyeni on unemployment numbers. Good morning, Ibukun.
Good morning, Chima, and good morning to everyone. So yesterday, the National Bureau of Statistics released the unemployment data for Q4 2020, and it showed that unemployment rose to an all-time high of 33.3%, which, according to Bloomberg, is the third highest in the world. We could actually attribute this to the pace of job losses as a result of the pandemic, as well as hostile business conditions, which is also an offshoot of the deregulation policies, the currency adjustment, which has weakened business demand for labor, as well as the NSAS protests. So this makes the slight recovery that we witnessed non-inclusive, as majorly the labor-intensive sectors were ripped off by the pandemic. Of course, in this report, there were no sectoral breakdowns, but from a previous sectoral report from the MBS, we discovered that agriculture and trade are the major employers of labor. Meanwhile, the trade sector has been in a recession for about 5 years now, and yet to recover from the 2016 recession. Meanwhile, growth in the ICT sector, which was on the beneficial side of the pandemic, could not translate into positive job growth numbers, as it requires less labor. Looking at educational qualification, we discovered that higher degree holders had better employment outcomes. That is, the doctoral degree holders, they had better employment outcome. On the flip side, people with vocational skills, they have higher chances of landing a job compared to those with A-level or BSc certificates. Meanwhile, we also saw that youth unemployment actually rose to 42.5%, and that is really high, and it also has socioeconomic consequences, given the rise in the crime rates, kidnappings, and banditry in the country. We could also point to the NSAS protests and the way it ended last year. So if we combine the unemployment numbers with January inflation numbers, we arrived at a misery index of 49.7, which makes Nigeria one of the saddest in the world. So if we look at the list, Nigeria is about number 6. It's among the top 10 countries with the highest misery index in the world. So given the fact that we are seeing a simultaneous rise both in inflation and unemployment, Nigeria can be said to be in a state of stagflation, as the growth we've recorded over the years has been below population growth and has been less inclusive. Furthermore, we look forward to the inflation release today by the MBS. Our thoughts on the unemployment data will also be captured in our notes. Thank you very much, Chima.
Thank you very much, Ibukun. Next, we'll be hearing from Emmanuel Adeoye. Good morning, Emmanuel.
Good morning, Chima. Good morning, everybody. We'll start again with the West African region where we saw yesterday. The BRVM closed as the lone gainer, posting a gain of 14 basis points, and that's reduced its year-to-date return to negative 4.71%. While the GSC again closed yesterday's session flat, the same pattern it posted in the previous session, and that kept its year-to-date return unchanged at a positive 14.08. And for the Nigerian equities market, we saw an extension of the bearish performance that we saw on Friday, that we recorded on Friday, where the market again lost 22 basis points yesterday, and the year-to-date return of the index again closed deeper in the red at negative 4.24%. For yesterday's session, we saw declines in a number of mid-cap stocks, among which included Nigerian breweries, which lost 534 basis points at the end of the day. We also saw declines in the banking sector, where Guarantee lost 260 basis points to close lower at 29.95 yesterday. And similarly, we saw the likes of Zenith Bank and UBN closing yesterday's session in the red. Although we saw positive traction in the likes of First Bank, Seplat, and UBA, but these gains were not enough to mitigate the effect of losses that we recorded in the consumer goods and some of the banking sectors. Talking about the guarantee and talking about losses in guarantee and Zenith Bank particularly. So on the back of that, the market maintained its bearish trend and subsequently closed yesterday's session again in the red. It was a quiet session yesterday talking about activity levels. We saw a to 161 million units, whereas we also saw a significant decline or significant dip in total value traded. The market did just 1.1 billion yesterday, 1.1 billion naira yesterday, and that was about 69% drop from where it closed in the previous session. But looking at it again, the banking continue to dominate total turnover as First Bank, Zenith Bank, and Guarantee closed as top trader stocks by value yesterday. And generally, sentiment has been in negative region, has been negative, and that again filtered into yesterday's session where we saw the market break closing negative at 0.89 times. When we talk about gainers, we had a total of 16 stocks which advanced in yesterday's session as against 18 stocks which settled south. And looking at sectoral performances too, it was a bearish one. The banking sector lost 1.01%, 101 basis points. Trading the consumer goods sector, which dipped 152 basis points, and this came on the back of the 534 basis point loss in the share price in WAPCO, Boboa Cement, and as well as Danksem. The sector remained flat yesterday, whereas the oil and gas sector was elevated by the 93 basis point increase in the share price of Seplat, and the insurance sector closed as the best performing sector, posting a gain of 1.98%. But losses in the banking and consumer goods sector eroded gains made in the oil and gas and insurance sector. Going into today's session, we believe although prices are low, like we've always said, we might also see some names, just like we saw in First Bank, Seplat, and UBA yesterday, but we still believe the market is generally weak, sentiment is low, and given the latest report again on the increase in the unemployment rate in the country and looking at where crude oil is trading out, that it is trading lower on the due to a number of European countries suspending the COVID-19 usage as a result of possible side effects. All this being put together with some of the indicators that we saw yesterday, talking about sectoral performances as well as market breadth, we still expect the market to maintain its downward slope. Yeah, we could see some maybe some results today. If we see some results today that could spur some buying interest, maybe that could lift the index upward. But barring any significant events, we still think the market would maintain its downward slope. But like we've always said, despite prices being low now, it still provides opportunity for some investors who are medium to long-term oriented, and for those willing to average down their position. We still think there are a number of counters that could be picked in the local bourse that would serve that purpose. That will be it for us this morning. Thank you very much.
Thank you very much, Emmanuel. Next, our weekly partner from the CGF boss, that's Sheikh Mbok, will be speaking to us on the performance of the BRVM. Good morning, Sheikh.
Hey, good morning. Thank you for having me. So in terms of the BRVM stock market, we have seen a growth in terms of an uptrend trend for the stock Palm Ivory Coast, Equities, and Setao, which have the share price moved positively between 9% to 13%. This was mainly due to companies not publishing their results since the first quarter of 2020. So there is still a positive. There's still a positive push by the investor, explaining the difference in the positive growth today. In terms of Setao, Ivory Coast, SMB, and Sonatel, they are leading the negative trend in the overall market. It is important to note that the Sonatel stock, which was growing a lot because of their the issuance of their annual report, showing a profit, was in an upward trend, and now has the share price has dropped slightly by 5.24%, and it affects the overall market because 1/3 of the market capitalization is towards Sonatel, which is the biggest stock in the market. In terms of highlights in the market, we saw Bank of Africa, Senegal, and Ivory Coast that issued their annual reports, showing a little decrease in their net income, and basically this was mainly due to an increase in depreciation and an increase in the cost factor, in the risk factor. Some cost that was increased by that. Also, the company Seacable Ivory Coast issued its 2020 annual statement, and it showed a net income that grew by 82.9%, reaching an amount of 1.16 billion CFA. This was mainly boosted by the acceleration of energy infrastructure projects in Ivory Coast. In terms of the bond market, the market remained very stable in the last 3 weeks, and the market cap is pretty much the same at and stood at 6.4 billion CFA on last Friday. So the market value, the week value traded stood at 3.2 billion against 7.36 billion last week, mainly marked by transactions in Mali treasury bonds. 3 billion were allocated to Mali, and there was a Ivory Coast treasury bond that was amounting for 1 billion CFA during yesterday's trading session. In terms of the money market, last week issuers requested to the WAMU money market a total of 100 billion CFA, and the market offered over 231 billion CFA. Showing an overall coverage rate of 231%. Only 110 billion were retained in the market. The issue of 60-month treasury bonds on March 9th was the most popular transaction from Guinea-Bissau, and this showed a coverage rate of 193%. This week, we are expecting some issuance from the Ivory Coast state for a total of 65 billion CFA with a 3-month term and a 60-month term, and as well as Togo for an 84-month maturity for a total amount of 20 billion CFA. That's it for me.
Thank you very much, Sheikh. Next, we'll be hearing from Omarege on currency and fixed income markets. Good morning,
Hello.
Marike.
Good morning, Chiman. Good morning, everybody. I'll be taking the market update for fixed income. I'll start with the money market. Yesterday, there was no official liquidity figures. So our estimate was that system opened around 100 billion positive, coming from 46 billion where it opened on Friday. So this significant improvement is largely supported by the coupon inflows of about 51.1 billion, which came in yesterday. Money market rates maintained to trade around 12% levels on the back of tight system liquidity recorded yesterday. So our expectation for today is that money market will trade at lower levels, given that there will be improvement in system liquidity today as OMO maturities of 143.4 billion come into the system. So I move to the FS market. So yesterday, despite the slight decline in R&E turnover recorded yesterday, we saw slight appreciation of the Naira in the R&E window. The parallel market remained flat to trade at 485 Naira to $1, while the R&E traded at the high of 412 Naira to $1 and closing at 408.90 Naira to $1. As earlier said, the R&E industry turnover decreased slightly to $50.67 million, coming from $63.88 million where it closed on Friday. So our outlook is that Naira will stay over around these levels, given that there's no significant supply of FS to the system. So moving on to the treasury bills market. So the T-bills market picked up where it left off last week on a very active note. We saw demand for the long-dated OMO papers, particularly the February and March papers. Bids seen on those papers were above 8.2% levels, while the offers seen were below 8% levels. So the disparity in the bid and offers led to few trades consummated across those maturities. We also saw some players try to offload their recent one-year NTB winning at 6% levels, but there were no bids on that end as players preferred to just wait for the next auction, which is happening tomorrow, to get higher rates. So our expectation for today is that the T-bills market will still trade the same sentiment that played out yesterday as players will continue to hunt for higher returns in the OMO space. So I'll conclude with the bonds market. So in the bonds market, the week commenced on a very quiet note with coupon inflows of about 51.12 billion spurring some buy side interest across the mid to long end of the benchmark curve. The maturities that saw the most action yesterday are this 2025 Sukuk, 2027 Sukuk, the 2034 maturity, and the 2050 maturity. Overall, rates improved by an average of 10 basis points relative to opening levels. So we expect that more trades will be consummated today as the bid and offer converge. That will be all for fixed income. Thank you very much.
Thank you very much, Omarige. Next, we'll be hearing from Temple Ashaju on other Pan-African markets. Good morning, Temple.
Good morning, Chima. Thanks for this opportunity. We'll begin with Eastern Africa, where Kenya has withdrawn from Somalia's sea border case, which was meant to be adjudicated by the International Court of Justice. They're saying they now prefer the African Union to wade into the matter. This is a case that the ICJ was meant to have held yesterday virtually, and it relates to the 62,000 square miles triangle in the Indian Ocean. We understand that Kenya is claiming that the ICJ is biased and that a particular judge that is supposed to be involved in the matter should recuse himself. And these are the reasons why Kenya is withdrawing, a couple of other reasons, basically. Moving on to other issues in Kenya, you've got the Kenya Mortgage Refinance Company credits to lenders now at 2.76 billion shillings, and over 1,427 mortgages or thereabout has benefited from this has been financed rather with that fund. We understand that the KCB Group, Stima Sacco, HF Group in Kenya, and a couple of other banks have benefited from the fund. Then in Ethiopia, EdSwitch, as it is called, gets some $2.3 million from AFDB to diversify its digital service. And of course, the company is a consortium of all banks, including the National Bank of Ethiopia. So the grants will be used to facilitate the design and of digital financial services in that country, because in recent time, they've been restructuring and reforming for digital governance and all that in that country. In Mozambique, 4 state-owned companies are to undergo restructuring. The post office is included in that case. Mozambican insurance company known as IMOSE is also one of the companies to be restructured in that part of the continent. Western part of Africa now, we all know that the central bank has extended the deadline. The response for proposal for the Infraco Asset Management Company till March the 30th. The initial deadline was today, 12 noon on 16th of March or thereabouts, but that has now been extended by some 10 more days or 2 weeks. And we expect the inflation reports today. Bank of Ghana has also revised the sanctions for issuance of Dodge checks. Now, if an individual, a bank customer, issues Dodge check within 3 times consecutively within a space of 3 years, that would have come with some warnings and documentation, or he or she will become banned from the banking space in Ghana. So something similar to what Nigeria has done is what Ghana is replicating at this point as well. I mean, Ivory Coast, Ivorian Cable Company, which is a major manufacturer of cable in that country, reported some profit of 1.17 billion CFA for the year 2020. In South Africa, Mr. Price is looking to purchase 100% issued share capital of UPChef. Mr. Price is a clothing brand in South Africa with a bit of presence in Nigeria as well. And they are looking to acquire UPChef. UPChef is a kitchen and home store company. On international income was of 6.1 billion rand for 2020. Profits was around 1 billion rand. ABSA says no dividend for this year, for the year 2020, as profits dips by 58%. Then you have South Africa's fintech startup Adumo raising some 225 million rands from IFC, that's International Finance Corporation, and the fund is to help them expand access to electronic payment solutions, especially for the rural areas and MSMEs. Namibia's breweries profits also declined by 46% over. Northern part of Africa, Cairo-based Afrexim Bank announces a $350 million loan to Morocco's OCP Group. OCP Group in Morocco is the world's largest phosphate mining and leading fertilizer company. And this is to also enable them facilitate their expansion plans across the continent. And Egypt is planning to introduce, or to produce rather, some 7.2 billion cubic feet of natural gas a day, the 2021-2022 fiscal year. Production level as of last year was at 6.6 billion cubic feet per day. And of course, this covered just local needs and provided a little bit of export. So this fund, this plan that they have on ground or strategy will be able to help them expand further and export more beyond the shores that they currently cover. And finally, you've got a Bank International Arab de Tunisia, the Bank of Tunisia, announces a stock split to 5 dinars per share in that company. It's a listed company, and they're looking to basically rejig their working capital. Headlines for today and Frontier Africa Market Reports. Thank you for listening.
Thank you very much, Temple. At this point, we can take questions. If you have any question, as stated earlier, please use the Q&A or chat box functions, or raise a hand if you'd prefer to speak. And if you're joining us on Facebook, please use the comment section to send your questions. We'll just give a few minutes or a few seconds for anybody that intends to ask a question. I see that Moshope intends to speak. Please go ahead, Moshope.
So good morning, everyone. Good morning, Shima. Inflation numbers were out this morning, and headline is at 17.33% year on year. Food inflation is 21.8% year on year, and core inflation stands at 21.79% year on year. As Ibuka said earlier, we'll be sharing our detailed inflation report much later in the day, which would also incorporate our thoughts on the unemployment numbers. Thank you.
Thank you very much, Moshope. If there's no other question, this would end the session here today. Thank everyone for joining us today. We hope that you continue to stay safe, and we hope that you join us same time tomorrow. Please have a great day. Bye.